Dante Disparte, it's great to have you here.
Thank you. It's good to be on.
So the audience has a lot of questions about crypto. Every time it comes up, a lot of things are conflated with one another. For many folks, all they know about crypto is Bitcoin, investing in Bitcoin. They might have heard of alt currencies, Doge, and that sort of thing. And I want to dive into stablecoin and what you guys do. But first, I want to zoom out. As somebody who's been working in the crypto space for a while now, start big picture. We're in 2025, going to 2026. Where are we when it comes to crypto adoption, its relevance to the global financial system? Use your favorite metaphor as to where crypto is right now.
All right. So if crypto broadly was supposed to be the internet of value, then right now we're moving from the dial-up phase to the broadband phase. And then specifically, we've earlier this year, we passed a real landmark piece of legislation called the Genius Act. The Genius Act is a new law. It's totally bipartisan law that effectively makes stablecoins, dollar reference stablecoins, like the ones we issue at Circle, USDC, America's answer to competing in this broader digital currency space race. And it also makes it an export product. As we speak, our Treasury Secretary, for example, is in the United Kingdom, visiting with the UK. And one of the provisions in the Genius Act is this notion of regulatory reciprocity with other countries and building an operating model in which stablecoins can work at world scale and internet scale, the same way that WhatsApp might work for you and me to transmit messages around the world.
So when we're talking about Genius Act, Genius, by the way, folks, literally stands for, because they do this a lot on Capitol Hill, they're like, that's a great acronym.
It's a great acronym.
How do we get it to work? The Guiding and Establishing National Innovation for U.S. Stablecoins Act. Genius.
That's right. The geniuses on Capitol Hill came up with that acronym.
Yeah, well, now nobody else can have a Genius Act. You guys got it for your world. Stablecoin is the S in Genius. Stablecoin is what Circle is, what your company is. Explain what a stablecoin is.
Sure. Well, look, there are a couple of analogies. I'll try a few on you, and you tell me which one works best.
Okay.
The easiest way to think of a stablecoin is the equivalent, a USDC is our dollar-based stablecoin, is the equivalent of uploading the physical US dollar onto the internet. You keep all of the properties of money, which is a store of value, a medium of exchange, and a great way of transacting with people. But its limitations of physical money are as far as my arm could reach. So I could only give $1 to you. I couldn't give $1 to one of your listeners from around the world. The second the dollar becomes a stablecoin, it now has all of the properties of the internet: transmissibility, speed, ultra low cost. And so millions of people around the world rely on stablecoins not only for access to the US dollar, but for more powerful internet native ways of transmitting US dollars, and that's what a stablecoin is.
So give me a practical example. I mean, like, I buy stuff on eBay and Amazon and online and, my favorite store, put in my credit card or in some cases, like my bank information, my routing number and account number. Where does stablecoin come in there? Why is it necessary?
Yeah, well, in that sense, it's almost important to understand that so much of the way we move money today, all of the traditional payment systems, from credit cards to wire transfers to the bank transfer model that you just described, not only do you as the payer have to submit quite a lot of your personal information in the spirit of just executing a very basic transaction. The other thing that is not widely known or widely seen is the fees that we exact for those very transactions. And they're particularly exacting and high cost on peer-to-peer payments or remittances. So people from around the world sending money to their family around the world is a very slow, very expensive way of moving money in the 21st century.
Right. Yeah. I mean, oftentimes you're dealing with wire fees and all the various
it's miserable.
things. Yeah.
And then the internal value proposition for moving money domestically is a value proposition of hurry up and wait. And we also don't see the fees that are charged to small merchants, for example, from credit card companies. And so in that domain, stablecoins end up becoming a perfect medium for open payments that are really, really low cost. And the second the transaction is sent, the transaction is settled. Most payment systems are messaging platforms that then do payments. Stablecoins marry the message with the payment. And so you get instant settlement the second you execute a payment with the stablecoin.
So where are we in terms of adoption? Am I like opening up a stablecoin account and saying I'm going to transfer $1,000 from my bank into stablecoin? And where can I use that these days?
Yeah, it's a very good question. In fact, it's one of the most often asked questions in Congress. Mercifully, The stablecoin hearings are now over.
Well, I was going to say one of the better questions, because sometimes those questions on Capitol Hill get a little iffy sometimes, right?
Yeah. And so, one of the most often asked questions was, where can I buy a cup of coffee with a stablecoin?
Yeah.
And in the same way that when mobile telephony took off, people didn't immediately give up the fixed line phone that they had in their house or immediately abandon the telephone booth, for example. It took time. And so that same transition is afoot here. And so for a lot of the very earliest users of stablecoins, the use case is access to digital asset markets very broadly. Because as the name suggests, stable is that much of the early crypto innovations were volatile by nature. And so there were really interesting investment assets, or there were potentially very speculative assets. And so stablecoins were designed to keep their price stable to the US dollar in this case. And so that was the first set of use cases. Now what you're seeing is every major payments company in the world, from Visa, MasterCard, and many in between, are effectively integrating stablecoins at the merchant acceptance level. Mm-hmm. And so in the future, you and I might be able to settle with the stablecoin the way we do with our credit cards, but at an ultra low cost and in a very direct manner that ultimately benefits the end users, right? The small businesses, the merchants, and beyond. So that's one of the more pronounced use cases that we see today. But the really powerful ones, the transformational ones, are in the context of cross-border money and in the context of a lot of commercial transactions, right?
So like B2B.
Not just B2B. It's actually, stablecoins are genuinely an internet of value for a couple of technological reasons. Number one, most of the world's big payment systems, from PayPal and others, are closed networks, right? They are the intranet or the extranets at best, which means that they're usable and they're speedy and they're low cost to people on the inside of the walled garden. But the second you want to transact outside of one of those networks, then comes the death by 1,000 cuts of fees plus the hurry up and wait. That's particularly pronounced in a cross-border payments example. So if I were sending money to family back home, in this case Puerto Rico or anywhere else around the world, it takes on average several days to clear that transaction. And globally, it's about 6 to 7% of fees to send a remittance. Stablecoins there are a killer app. Again, analogizing very much to messaging platforms like WhatsApp and beyond.
So back to the previous question, I can't use stablecoin at a Starbucks yet.
Well, so you can. For a lot of people, the experience of retail acceptance of stablecoins is that they're now an underlying currency on the Visa network, for example. So in many cases, wherever the Visa or MasterCard logo is accepted, if you're an early adopter of stablecoins, as many millions of people are around the world, then they could merely use the tap and pay feature of their Visa card, for example, at a coffee shop and buy
and distinguish between the stablecoin but is there like a Circle app or like I guess the issue you deal with is like we only know what we've seen so far, and so like, okay, is it like Venmo or is it can I use it through Apple Pay? Like how do I sort of visualize like my stablecoin account?
Well, so that's a very good question, and in the same way, this is why I would argue that we're moving from dial-up to broadband. We're not quite there yet. The sector, it's because fundamentally, a lot of the technology that delivers ultra-fast, global-scale internet money like stablecoins, the end point is an internet-connected wallet, right? A basic internet-connected device. Many of us were lucky enough, we were born in the right postal codes, and so it's a ubiquitous reality that you have a smartphone in your hands. Most, if not all of those smartphones are equipped with the ability to download an open-source wallet, where you can get a wallet from any of a number of crypto exchanges like Coinbase and many others. So that's one layer that faces the retail end user. Millions and millions of people around the world have that capability in their hands all over the world. In fact, in the last 7 years, USDC, our dollar stablecoin, went from 0 to more than 180 countries, in part because the architecture is open source. That's one big, very important point around financial access. The next important point is, of course, many of the networks that we just discussed are now accepting stablecoins as a native settlement currency on their networks themselves. And so that permits people to conceive of instant sending of money internationally, dollar savings accounts, because many currencies are often not worth the paper they're printed on in terms of inflation. And so for many people, a stablecoin is not a payment innovation, it's a dollar savings innovation. And then lastly, a lot of the commercial transactions and beyond are all happening. So that's the phase we're now in. And one of the things the law allows for is it allows for institutional adoption to follow suit, which is where you'll then start to see ubiquitous acceptance from, coffee shops all the way up to online commerce and beyond.
How quickly do you see that happening? Is it a matter of months, years? What's the...
Yeah, it's well, this is the maybe from the Matrix movie. Remember when the agent had Neo on the tracks and he's like, "You hear that, Neo? That is the sound of inevitability." I do think there is this wave that is coming in this sector around broad-based institutional adoption. The law allows that. In fact, the law encourages it. Today, the total stablecoin market is approximating $300 billion in total circulation and trillions of dollars of economic activity, both in these internet native markets and also touching real world activity. And so it's already big. Stablecoins today are already approximating the type of transaction throughput and activity you would see on the major global established payments networks. And they've done that in the span of 7 years. And so in some ways, it's already here. The future is already here. It's just not evenly distributed. What we're trying to push for and what we think these new laws push for and what regulatory harmonization around the world pushes for is that we can now start to anticipate a more even spread of this type of innovation across the world, because it has profound implications for access, for low-cost payments, for the role of the U.S. dollar in the world, and for broader economic competitiveness.
Yeah, and I mean, even as you talk about it globally, like, the whole idea of like going into the local currency. I mean, your vision is that will be accepted globally.
Well, and in some ways it already is. And this is why the real phenomenon, and so, I often, as I had to sit through 7 years of public hearings to get to this recent moment with the Genius Act, I often found that the question of where can I buy a cup of coffee with it ignored the actual most important original stakeholder of stablecoins, which are people who don't get to speak in Congress. It is in many respects an emerging market and a developing market innovation for access to stable currencies. So the first use case outside of crypto trading and crypto markets is in fact people wanting access to the US dollar or wanting access to stable currencies, but who otherwise couldn't get it through the traditional banking system, either because of financial de-risking or because the cost of banking people in developing and emerging countries is prohibitive. And so stablecoins allow us to render and deliver ultra low cost access to the dollar at world scale.
Just zooming out here, when we talk about stablecoin, your Circle, the other is it basically you guys and another company called Tether?
Yeah, well, so the funny thing is, Circle and Tether are the two big players, right?
Yeah.
One of the benefits of legal clarity, and we saw this absolutely in Europe, we're the first major company to be compliant under Europe's laws for this market, known as the Markets and Crypto Assets Framework. If I gave you the acronym, and I would have explained it. Yeah. But one of the phenomena of legal clarity in Europe, and Europe is not the place you turn to necessarily for examples of competitiveness, is that more than 15 companies today are operating on the same level playing field. The Genius Act, we expect to do the same thing. We expect it to produce a very competitive market and a level playing field. Because as much as we can sing the praises of this innovation, the last 7.5 years have also been marred and marked by a lot of checkered examples, from the failure of exchanges like FTX to the failure of stable and name-only coins like Terra
for many
Luna.
people, they get this impression, for obvious reasons, that there's a lot of volatility, a lot of things that make me nervous about getting into this crypto space. Yep. Yeah.
Hence the rule of law. Yeah. Belts and suspenders are important in any novel market. We as a business have always aspired to race to the top. In many respects, the Genius Act in some ways models much of the good behavior and good standards we've tried to establish as a company, but it makes that the norm, not just for companies operating in the United States. A stablecoin issuer who references the US dollar should pass the America First test. Doesn't mean America alone, but it does mean you have to be America First, in which you could build according to US standards. You can compete competitively at the state and the federal level, and fundamentally then you export that standard around the world. So we think it's a competitive market, and we think there's going to be a lot of flavors of what this innovation looks like in the future, but fundamentally they now have a floor.
What's the difference? I mean, just as an average consumer, as I consider what stablecoin to use, like why should I be using Circle? Like competitively, how different are the various offerings?
Well, one point is that not all stablecoins are created equal, right? There is the bill of goods question, which is that, if you look back into history, there was a stablecoin, a stable and name only coin called Terra Luna, which spectacularly blew up in the span of a weekend, in part because it looked more like financial alchemy than it did a dollar. And the other very simple test is what I like to call the Jerry Maguire test, which is show me the money. Up until the Genius Act, stablecoin issuers had no obligation in the United States to not only prove that they had the reserves that they said they would have, that they could redeem 100% of their circulation at par for a US dollar to anyone, anywhere in the world, and survive bankruptcies and failures in the banking system and beyond. And Circle is battle hardened as a business. We're a 13-year-old overnight success in our markets. And in those 13 years as a company and in the 7 years since we issued USDC, we have seen it all and we've survived it all, including the U.S. debt ceiling crisis, right? And so to do that means you're better than most of the big systemic banks in terms of trust, safety, accountability, transparency. The Genius Act now imposes that as the basis for issuing dollar stablecoins.
So bringing some rules to the Wild Wild West. By the way, if I put it, how does it work with interest in my account? If I have a stablecoin account, like, am I garnering interest on it? Does it say stable? I mean, especially since, again, our frame of context around crypto is always like Bitcoin's up, Bitcoin's down, Litecoin's up, Litecoin's down, Ether's up, Ether's down.
Yeah.
What, I put $1,000 in today, $10,000 in today. Like, where is it 6 months from now, a year from now?
Yeah, it's a very, very good question. So both legal regimes on both sides of the Atlantic, the European framework and now the Genius Act, preclude stablecoin issuers, regulated stablecoin issuers, from paying yield or interest directly to the coin holder. That's an important design principle in general, in the same way that if you were the issuer of a physical dollar, the first instance of a physical dollar does nothing for you other than serve as a great store of value, medium of exchange, and unit of measure. That is it. Every other thing that you could do with a dollar, from lending to credit to borrowing and everything else in between, is a secondary market innovation. And so in order for stablecoins to stay true to that promise of being tokenized forms of money, we think it's also important that we protect and preserve the secondary market innovations in digital assets that are giving people yield. And so that's what the Genius Act prescribes as a matter of law. Other rules are coming soon from Congress and others around market structure, which would address that question in the United States. But today, many crypto exchanges leverage USDC as the core fundamental unit of measure on their platforms, on which then you could provide lending, credit, and all other interest-bearing solutions that are in the secondary market.
So if I, average person or friends or family ask me about this, like after this conversation, what is the way you pitch people first engage in stablecoin?
Yeah.
Right? Like, I bank with JP Morgan Chase, I have a Visa card. What is the sort of like first thing I can do that'll give me a sense of how I can engage in this space?
Yeah. Well, and in many cases, even in the examples of the very biggest banks in the world and the biggest institutions of the world, they too are figuring out how to engage in these markets because they could see the challenge of, number one, is it really your money if you have to ask someone to spend it and you have to pay someone to hold it for you? Number one, that's a general concept. And number two, where have our payment systems fallen short? And where has our banking system fallen short? Your and my financial needs don't take bank holidays, but our current banking system does. And so stablecoins are a form of money and a medium of exchange and a payments innovation that don't take bank holidays. They're near instant, they're near free, and they're transmissible to anyone, anywhere in the world. And so for virtually anybody in the United States of America listening right now, think about the use case. In the COVID-19 pandemic, the federal government sent physical checks to people.
Right.
In a quarantine, a physical check is a liability, not an asset. Wouldn't it have been nice to be able to send people instant, verifiable payments to their mobile wallet? I don't know of a bank that can do that reliably, speedily, and nearly free to someone outside of the bank's walled garden. And that's where stablecoins complete unfinished work in the banking and payment system rather than disrupt it or compete with it.
So am I creating account somewhere? Again, practical.
Very
like,
practical.
I'm calling my parents after this and suggesting the following.
So, well, in that case, first step, ask your bank why they're not providing this service to you, because they ought to. Be step one. And candidly,
any major banks providing this right now?
There are many. In fact, I mean, Circle itself is a wholesale company, so we face institutions. The institutions then face the final consumer in the retail market. But the first question is, why is my bank not future-proofing its own delivery of these services to you, the customer? Would be one important question to ask. The second option, of course, is to go to the neobanks, the fintechs, the crypto exchanges, Coinbase, Robinhood, and there's many companies that have almost built the entire business model and architecture of the banking system, but in this digitally native way. those would be your port of first call. In the same way that, again, back to my internet of value analogy, not everybody adopted the mobile phone first.
Right.
But today you look back and most everybody, if not everybody, has one. Same with, airbags in cars, right? It was once a luxury feature. And today it's standard. And I do think that we will come to a point in time where this is the standard for, technology-powered payments. It's just a better medium of exchange for that world.
I would imagine there's been pushback from certain entrenched interests that have been making and profiting, making a lot of money and profiting off of the existing system. We mentioned the banks. We mentioned the credit cards. How are you working with those industries? How are they embracing this space? To what extent, how would you describe that relationship right now?
Yeah, I have a piece published out there in the interwebs titled "The Banker Doth Protest Too Much." However, today, number one, we've partnered very deeply with banking institutions, with asset managers, but it wasn't an easy pathway, and it did require not only sort of competitiveness at the business level, at every level, the technological and operating level as a company, but we've also had to prove that these business models could in fact produce all ships rising moments, not just for institutions but for people. One of the interesting things about the Genius Act is that it had to protect what is unique in the United States about banking and payments, which is fintech federalism. The United States, up until the Genius Act, is the only country of the major economies that regulates banking and payments at the state level. Circle was born at the state level, Apple Pay, Stripe, and others were born at the state level. But if a bank wanted to issue a stablecoin under the Genius Act, they would actually have to look more like Circle and less like a bank. One of the simple reasons why is that if a bank issued a stablecoin, but the stablecoin was a representation of the bank's balance sheet, which has credit and lending and all kinds of risk in it, then you would have that risk native in your digital token as well. And so that's one of the novelties is the Genius Act encourages competition, but it encourages competition in the safest, soundest way possible, which is that you cannot take risks with the reserves backing a stablecoin.
What protections are for consumers right now?
Yeah. Well, number one, we have to be very, very careful as a country. And this is where I think the United States got it right, and the Genius Act got it profoundly right, is because all too often creating wealth in our country and creating wealth in most advanced markets presumes wealth in the first place. And one of the reasons the crypto industry was such a very powerful force in this last electoral cycle is because it's for the first time ever, all of the advanced features that make people more money on Wall Street are available to anyone, anywhere. And so we have to stop doing with over-regulation and enforcement what we could do with better disclosure. Even poor people have sufficient agency and sufficient financial literacy to take risk because everything else has left them behind. And so I think that's one important just general message. The second, of course, is we should not allow counterfeits of the US dollar on the internet to circulate freely in the United States or in any other market. The Genius Act stops that in its tracks, even criminalizes doing that. And we need money that works for people. And this is, in my view, that exact form of money and that exact form of innovation. My new one-liner is you can't have the economy of the future unless you have the money of the future. And isn't it great that we can now look to either these new laws or the new future that's being created, in which everyone everywhere with a basic internet-connected device has the full array of complex financial services delivered to them safely and soundly through their technology. That'll lower the cost of being banked. It'll lower the cost of earning money and saving money, and it'll create a form of money that will work for people. We have to deliver that at scale here in the U.S., and we have to export that around the world. That does not mean it's risk-free, but it does mean that we could start encouraging some rules-based competition in this market. As
you lay out your vision here, I'm curious, you talked about sort of the transition from dial-up to broadband. The equivalent is happening here. What does the world look like in 10 years, like in a practical way? I mean, it's funny, you were talking about the various examples out there. And I had to transfer money. It was after 5 p.m. on a Friday. It was a three-day weekend or whatever. Yeah. It's that transfer won't go until Tuesday, in the year 2025.
Hurry up and wait. So I'll give you a really pronounced example. One of my daughter's college friends came to the United States from abroad and needed money. 300 euros were being sent to her from overseas. And they spent several hours, my daughter in solidarity with her friend, going to all of the remittance MoneyGram or Western Union locations in the city to see which one was open so that the money could arrive. And by the time you cleared 300 euros, subject to FX, plus the fees, plus the waiting, plus several hours of walking to find the location that was still open, that's a very, very exacting cost.
Yeah.
What the tech does...
Which also feels like that made sense 50 years ago, but it's crazy that...
Exactly. Yeah. And so what the technology does in that example is it doesn't solve all of the other challenges and frictions of moving money, but it at least shows us that status quo has fallen short of a lot of people. And so if in the future, ideally, the total scale of stablecoin-based transactions and the rest of what we like to call the internet financial system will be in the hands of everyone everywhere. And so now you don't have to hurry up and wait for your money. You can get back to whatever it is you were doing as a productive member of society. That's powerful. That's very, very powerful. And I do think the tech has to fade to the background. When was the last time we spoke about the hardware and the software that makes the internet possible? And I do think this next wave of internet evolution in banking, payments, and finance will also have the tech fade to the background, and people will enjoy effectively the outcomes.
So, I mean, it's interesting. Your example involves your daughter, who is very familiar with what her father does.
Yeah.
How many years away are we from fixing the roaming around Manhattan looking for a Western Union?
Yeah, well, the funny thing is, this is where you got to really look to the experience overseas as teachable. Several decades ago, of course, many countries in sub-Saharan Africa and Kenya particularly had enormously high rates of underbanked or unbanked people in the population. Along comes innovations like mobile money networks like M-Pesa. Famously, when I was recently with the central bank governor from Kenya, reflecting on COVID-19 and the pandemic and the slow pace of moving money in America, he was like, it's quaint that you sent checks in your country. We haven't touched a check in Kenya for any kind of public issued money.
I just sent a check to
for a decade.
I think I had to pay New York State taxes via a check.
Right.
Yeah.
And so in some ways, the transition in the advanced economies might feel like it takes longer because it to so many of the incumbent ways in which we're moving money, including checks, are baked into the system. And this is where we have to ask a very, very hard domestic question. The objective of stablecoins in the United States of America is about introducing payment systems optionality. Wouldn't it be nice as a national security issue or as when the lights are off, cash is great. But when you don't have to go to every Western Union location physically in Manhattan to find that one that is open that can give you your money, it's also great to be able to have digitally native payments. And so the point is, the more options you have, the better. But there are some really teachable lessons about access and innovation from other countries that I think we could learn from.
We were talking about the Genius Act regulation, Washington, that's where you're based. There has been a lot of attention paid to President Trump's family, their various crypto ventures, the perception being it's an insider playground. Certain people are getting very rich from it, leads to increasing skepticism, at least on the part of some people out there. What do you say about that? What's your perception about sort of what's been happening in the larger crypto space, and how does it impact what you're doing?
Yeah, first, I would just caution that the term of art is not monolithic in the same way that banks are not monolithic, right? If a bank failed somewhere in the world, not every bank has to atone for the sins of a bad bank. The second is I would not ignore the fact that the Genius Act at no level is a political land grab. This is as bipartisan a piece of legislation as we've ever had, and I think it's unique in U.S. legislative history in being the first law that is genuinely pro-innovation and pro-growth, and certainly in financial services. It is entirely competitive. One of the hills that we all had to die on and be prepared to die on with the Genius Act was the preservation of states' rights. The states are the laboratories of democracy as much as they are innovation and banking and payments as well. And so the Genius Act kept that provision intact. And so even if a Trump-affiliated stablecoin project were to launch in this new environment, they would have to do so subject to that law. 108 Democrats voted in favor of it. Just today, I actually wrote a piece on the Genius Act for an international audience, because I don't want anybody anywhere to assume that we somehow as a country and our policymakers somehow shortchanged America. The single most important asset we have is our national currency. It's the most important export asset we have. The Genius Act will pass the test of time. It will pass the test of political bipartisanship or nonpartisanship in Washington, or hyperpartisanship, whatever the right term is. It'll age well. And it'll be a standard that I actually think will drive a lot of technological and economic competitiveness in our country.
And curious, just because it's come up a lot on our account, people concerned about the fate of the dollar as the kind of dominating global currency. How does or doesn't stablecoin work into that? Totally. The overall value of the dollar?
100%. Well, it's in fact the what's at stake in the broader geopolitical and geoeconomic race is you don't weaponize a currency, you weaponize the rails on which a currency rides. And an example of this is the efficacy of U.S. and Western sanctions against Russia for the war of Ukraine is the degree to which the banking and the payment system, in this case SWIFT, which is the global society that moves money between banks, are responsive to those sanctions obligations. And there's two choices to make here. This part is very stark. We have a choice in which the dollar becomes a native currency on the internet, and we collectively can push back and protect and preserve safety, soundness, and that imprimatur of trust that comes with the US dollar everywhere around the world. Or we could choose to have other countries and other nations lead the race there. And the race is not about supplanting the dollar in a slow period of time. It's about gradually de-dollarizing over a long period of time. Central banks can do that by moving away from dollar reserves. Payment systems can do it by not touching the dollar banking system. And that's the cost. And so a frog doesn't jump out of a slow boiling pot. And that's what this de-dollarization trend looks like. It's slow. It's gradual, and then one day you look back and you find that this exorbitant privilege that the United States has diminished. I think stablecoins drive up demand for U.S. Treasuries and dollars, and the Genius Act makes dollar-based stablecoins the de facto answer the United States has in this broader digital currency space race.
Before we go here, any misconceptions you want to clear up, or common questions that you get that I haven't asked here today?
Yeah,
Dante?
well, I mean, there are a few. We could just do a quick rapid fire round.
Yeah.
I mean, one of them is, gosh, aren't blockchains and blockchain-based financial services really, really bad for the environment? The short answer is
energy usage. That's a huge thing. I mean, now you guys have only that question now goes more to AI people than you, but that's been a common question.
I know I'm so happy for AI because now some other technology can take the lightning rod. But that's one question that should come up often. There's a lot of misconceptions around that, and the short answer is no. 21st century modern blockchains are no more computationally inefficient as a basic internet search. And so there too, there's one important misconception. The other one, of course, is that, all crypto is risky and all crypto is speculative. I think that ignores the fact that crypto is short form for cryptography. The very same things that keep our planes in the sky and our cyber systems safe and redundant and beyond is really what's powering the underlying platforms and technologies of stablecoins. And the last one, and this one's really important, actually. It's the part that creates jobs, which is, we could be so risk averse as a society, not just in the US, but around the world, that we end up protecting our economies from relevance and job creation. And so in my tenure at Circle, 4.5 years, we went to a 100-person company 4.5 years ago with an idea and a fledgling business model to a large company with more than 1,000 people employed in 35 states and 15 countries and counting. And so somehow we also have to look at this as a wave of innovation that can power entrepreneurialism. And the thing that does that is not just the fact that the stablecoin USDC is open, universally available, but that all of the technology that powers it is available to anyone, anywhere as well. And so entrepreneurs, developers, builders, companies, large and small, are building on this common internet financial system that we're talking about.
Dante, thank you very much.
Thank you.